What if the deadliest conflict of the 20th century was also one of the most profitable business ventures in history? While battles raged across continents and nations faced devastation, men in tailored suits quietly counted profits. This global struggle is often remembered as a clash of ideologies, freedom versus tyranny, democracy versus dictatorship. But behind the front lines, another story unfolded, one of financial power, secret deals, and banks ensuring they profited no matter which side prevailed. It's a story less about flags and more about ledgers, and about how money can shape the fate of nations. After World War I, Germany's economy collapsed under reparations and hyperinflation. But rather than letting the nation sink, international bankers stepped in. The Dawes Plan of 1924 and the Young Plan of 1929, both with Wall Street's involvement, injected billions into German industry. American giants like J.P. Morgan issued loans that rebuilt factories and stabilized the currency. When new political leaders rose in Germany in the early 1930s, many financiers didn't see the dangers ahead. They saw discipline, stability, and repayment potential. For global bankers, economics often outweighed politics. When global war erupted in 1939, many assumed financial ties would stop, yet they continued quietly. Some international banks operated in occupied Europe, cooperating with new authorities. Certain American corporations kept indirect connections to German firms through subsidiaries. And in Switzerland, the Bank for International Settlements acted as a financial crossroads, handling transfers of gold and reserves between central banks on both sides. These channels provided the resources that kept industries functioning. To bankers, the logic was simple. Money flowed where opportunity existed, regardless of flags. Meanwhile, Wall Street and London became engines for the Allied cause. The U.S. launched massive war bond drives, raising billions from ordinary citizens. The Federal Reserve and the Bank of England coordinated to stabilize currencies and fund massive weapons production. By 1940, Britain was running out of money. Gold reserves were shipped across the Atlantic to Canada, then used as collateral for loans from American banks. U.S. factories, fueled by these loans, built the tanks, planes, and ammunition that turned the tide. This wasn't charity. War bonds paid interest. Loans generated returns. For financial institutions, the war economy was also a profit engine. So how could bankers maintain interests with both sides of the conflict? The answer lies in cold financial logic. By keeping investments diversified, they guaranteed returns no matter the outcome. If Germany prevailed, loans and business ties would pay off. If Britain and America triumphed, war debts and bonds would yield interest. For financiers, ideology mattered less than repayment schedules. For governments, war was survival. For bankers, it was portfolio management. Some of the most famous financial dynasties had global reach: the Rothschilds, the Rockefellers, the Morgans. Their banks operated across continents, influencing both wartime finance and post-war recovery. At the Bank for International Settlements, representatives from opposing countries shared seats on the board, conducting business even as armies clashed. Corporations linked to these dynasties also prospered. Oil firms supplied fuel, while major Wall Street houses financed Allied bonds. For these families, national loyalty was secondary to financial interest. War, in their view, wasn't just destruction, it was also a market. When the war ended in 1945, bankers weren't punished. Instead, they helped design the new financial order. At Bretton Woods in 1944, the IMF and World Bank were created, with the US dollar as the centerpiece of global finance. Wall Street emerged as the new capital of money and power. London retained significant influence. Germany, once destroyed, was rebuilt with Marshall Plan aid, financed by the very institutions that had fueled earlier loans. For financiers, war and peace were two sides of the same cycle: destruction followed by reconstruction. Nations paid the cost, but bankers, as always, collected the returns.